Today I want to present about our finance management assignment. My name is Cai Kai Jun and my group mate Yasmeen, Wang Wan, Wang Wen Yao. For our assignment, we are talking about the Novo company, which is a public company in China. Now the Novo company is in the stock exchange of Hong Kong. The code will be 0992, and for the Novo, they are built in 1984, and the builder is Liu Chuanzhi. And the industry they are looking focus on is computer, hardware, electronic. The area served is worldwide. But besides on computers, the Lenovo still produce smartphone and those 3C products. The big important thing for Lenovo is that Lenovo has purchased IBM's personal computers business in 2005, including the ThinkPad laptop and the table lines. And in 2000, the Lenovo has become the third rank in the China mobile hardset market, and Lenovo also entered the smartphone market in 2012 and quickly become the largest brand in the smartphone market in mainland China. And in this year, July 29, Lenovo has purchased the Motorola Mobility from Google. And the news is that Lenovo has completed the purchase, and after they purchased the Motorola, they become the third biggest smartphone producer in the world. Now I will talking about the ratio analysis for Lenovo company during 2011 to 2013. First, we were looking at current ratio. In this current ratio, we can see that in there, according to those data, the Lenovo company has more and higher liquidity ratio in each year, and it was showing that the Lenovo has a good increased liquid asset and also short-term solvency, and also it's become stronger than previous year. Now it's going to quick ratio. As we can see, the quick ratio is a little bit shaped since 2011 was 0.89, and when it comes to 2012 it was increased, is 0.9, but when it come to 2013 it was dropped to 0.84. So in the quick ratio, the better performance than the current ratio of a company short-term solvency, according to the conclusion that this company has a good short-term solvency, but the downward trend. Now we are looking at activity ratio. The first, inventory turnover ratio. The company is able to sell their inventory from 2011 is 22.86, and when it comes to 2012 it was 25.84, and after 2000, in the end of 2013 it was 18.72. In this case, was showing that corporate asset due to sale does not have a high liquidity. Inventory transform cash for accounting receivable rate of decline, and inventory level is very high. Now we are going to average inventory of a year. The company is able to sell off its inventory in an average 15.97 in 2011, and when it on 2012 it was 14.13, and after in the end of 2013 it was 19.5 days. In this result, we can find out that in 2012 it was the best time for Lenovo. They can sell off all their inventory in 14 days. But during 2013 it was increased, and they cannot handle very well. So the inventory turnover rate of expansion for a correction period is more slowly. Now we are going to average collection period. In this data are showing that the average collection period are increased. The Lenovo company maybe had cash flow problems. Now we are going to average payment period. In this data, we can find out that in 2011, Lenovo has the shortest average payment period. In 2013, it has come back from 2012, since 15.7 days to 43.31 days, but it was still not good as 2011. Now we are looking at total assets turnover. For every $1 of assets utilized, the Lenovo company can generate 2.02 in 2011, but it was same as just now. They are dropped from 2011. In 2012, they only have 1.8486, and in the end of 2013, they come back, and we can consider as that maybe in future, Lenovo will become better in this ratio, and Lenovo has a good assets turnover. Now we are looking at debit ratio. The first one, debit ratio. In this data, we are easily found out that Lenovo company in 2011 to 2013 it was very high debit ratio. They have a very high risk because of the high debit ratio. Now is time interest earning ratio. Based on those ratio, we can easily to find out that the company has a good profitability for payment of maturing liabilities, because and also the rate is increasing year by year, and it's a huge increasing. Now we are looking at FPCR. FPCR is almost same as just now. They have increased a lot, and based on those ratio, the Lenovo company has a good long-term liability. As we can see, they can have 7.06 0.01 in the end of 2013. Now we are looking at profitability ratio. For every $1 they sell, the Noble company, at least in 2011, they can generate 10.95%, and when it comes to the end of 2013, is 12.03%. So the profitability of gross profit for the Noble company has become stronger, and they have do very good job in this part. Now it coming to operating profit margin. Same as just now, gross profit margin, the Noble company has increased year by year, and according to those data, the Noble company has a good profitability of operating profit also. At the net profit margin, for every $1 sale, the Noble company is able to generate 1.9% in the end of 2013, and it was increased 0.6 from 2011, and the profitability of the Noble company was become stronger. Now is earning per share. For the return on total assets, as we can see that in every $1 of total assets invested is can able earn 3.8% in the end of 2013. The Noble company has achieved good results in increased income, saving, and others costs of the using tools of the problem solving skills. For the ROE, as we can see, the Noble company has a very high ROE during 2011 to 2013, and as the Richard Lowe said that the ROE between 15% and 20% are generally considered good. Based on this, we can say that the Noble has done a good job for this, and they have a very good ROE, and also they have a huge increasing every year is around 5%. Now we are looking at the last ratio, market ratio. As the booking value per share of common stock is start from 1.4 to in the end of 2011, and in the end of 2013 it was 1.01. And according to those data, the Noble company is increased in their market ratio, and they had a good investment value. So in the end of this presentation, we can comment that based on those ratios, we do think that we can invest the Noble company, because now the Noble company, as just now I say, they has been purchased Motorola, and they are the third biggest producer for the world, and also for the computer part, they are very strong in the world, not only Asia, and even they have a very high debit ratio. But as we know that high risk also will bring very high profit. Even they have some problems in 2012, but they has been come back. So I do think that we can invest the Noble company. Thank you. This is all of our group assignment.